Let's get you started here on a Monday and open up our grain trade first, shall we? I'm Marlon Bowling with you, and as we look at our corn trade, this is how we're getting rolling. We are rolling downhill. We have December corn now trading at $4.15, and that is down 4 1/4 cents from our close on Friday. Now, it has been lower than that at some point here. We got as low as 4.12 3/4, and it clawed its way back a little bit, but still quite a bit of pressure in the corn market to get going here this week. Remember, this is the final trading week of October. Now, with these quotes provided by bar chart, let's shift over to soybeans. And soybeans started out a little higher on the overnight trade and ended a little lower. We have November soybeans now trading 3 3/4 lower at $10.80 per bushel. Now, remember, they go into first notice day at the end of the month here. So let's also take a look at January. That's down 3 3/4 cents at $10.77 1/4 this morning. And that's about a dime off of our overnight high. Now let's switch over and take a look at our wheat. In Chicago, we have December down 15 1/4 cents at $6.17 1/2. All kinds of profit taking hitting this wheat complex today. And I present to you Exhibit A, December Kansas City wheat now at $5.49 1/4, down 20 1/2 cents. That's a massive drop all in one time here. And in the Minneapolis spring wheat trade, December down 11 1/2 cents at $5.66. Wow, I want to turn to Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky, and find out what that's all about. What happened to the wheat market here?
Well, you got some showers here that occurred in the southern plains. They were light, but nevertheless, rain is rain, and we got a few showers that are in the forecast over in Russia here. And, of course, the wheat market's been up quite some time, and if you look, you can see the dollar is higher here this morning. But I think when you tie everything together, you look at your stock market down about 420 points. And, when you go back and look at the coronavirus, we're seeing several states are surging here. And I think that's become a factor. And also the stimulus package here looks like it's beginning to have a breakdown here. So all of these come together, I think, in the grains and are just causing some profit taking for the moment.
Dewey, how much downside risk do you see in the wheat market and, well, for that matter, the corn and soybeans as well here?
I could see the D's contract here coming down into the area of about 602 here. And as far as the corn market, as long as we stay above 409, the trend remains up in corn. If you start moving below that, then I think, we could start seeing a hit developing corn.
What about on the soybeans then?
Soybeans, they look like they still got a little bit more upside, but what I've noticed about the beans, and that is these momentum indicators are lagging here in the beans, which is not a good omen. If we haven't put a top in yet, we're probably not real far away.
I was reading some comments over the weekend that the indicators, one widely used indicator is the stochastics, and it follows a fast line, a slow line when they cross and all that. But that had shown a lot more overheated tendency in the corn, apparently, than the soybeans. But they said it was starting to turn in the beans. Would you agree with that?
Yes, it is starting to turn.
Okay. And I know you follow technicals very closely. You also follow the Elliott wave. Does that tell you anything on beans or corn?
Yeah, it tells me that in beans, especially here, that we're probably getting close to putting the top in from the August lows and maybe even from the contract lows.
Okay. Dewey, we'll come back, and I'm glad you mentioned that about the dollar, too, which is up over 200 points. We'll come back, and we'll take a look at our livestock open here on a Monday with Dewey Strickler right after this. Let's check out that crude oil market this morning with the hurricane brewing down there in the southern Gulf of Mexico. Just wondered if that was going to have any impact, and it's actually lower. That's interesting. December crude, the West Texas Intermediate crude, is down $1.10 at $38.75. Maybe they think it's going to miss most of the refineries and a lot of the platforms in the Gulf. However, cotton market this morning is higher, and December is 45 points higher at 71.74 per pound. So just wanted to point that out. Now, a lot of interest in the cattle market this morning. We had the cattle on feed report that came out Friday, and we're actually higher this morning. December live cattle 45 cents higher at 104.02 per hundredweight. Pretty consistent gains all across the board on the live cattle. On the feeder cattle, there was some notion that that would be under pressure today because of the high placements number Friday. Well, that proved them wrong. November now on the high of the day at 130.70 per hundredweight. That's up $1.05. So take that one. Okay, on the lean hogs, we have the December contract 95 cents lower at 66.07. And February down 32 at 66.60. All right, Dewey, opening calls on the cattle seem to be kind of weak. That didn't turn out to be the case today. How'd that happen?
Well, I think it's because if you look at a chart here on the cattle, we've had a pretty good downtrend here. I don't think that the sell-off is over, but I do think that short term we're probably due to get a bounce, maybe a couple of bucks here in the cattle. Here, when you look at some of the fundamental factors, of course, the on-feed report was rather negative here, and weights are creeping higher here. They're up about the highest we've seen in about 5 years. So I think that will keep a lid on the cattle market, but short term, yeah, we're overdone here for a while.
Is this one of those cases where it was all factored in before the report ever came out, and in this case, it would be a sell the rumor, buy the fact type thing?
Well, I think we probably do have some of the variations from the on-feed report was factored in because, after all, we've been down about 3 consecutive days in the cattle.
3 days. All right. Well, thank you, Dewey, for talking with us here this morning. Always good to hear your take on the markets as we start out the week. I wish you well this week. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. Christina, with that, I will turn it back to you.